What's going on, YouTube? It's Dave's Daily Trades, back again with a quick update on AMC. So we were up 2.02% today, so not a bad gain. However, it was not the day that I personally was looking for, as I know a lot of you will say the same exact thing. The big reason is volume was so dry today, as we can see throughout the just about entire trading day. But I'm going to be breaking down two options in where I see AMC moving in the next couple of days, pretty much just to end the week off before the holidays. And of course, guys, we're going to be discussing the options flow using unusual whales. But without further ado, let's roll right into that intro and hop into the technical analysis. And we're back. All right, folks. So, decent start to the trading day today. So what happened? Well, we did trade down in pre-market, which was totally fine, but quickly rebounded. Our morning low on the day was $29.05, and we actually came right up to a high of $32.22. So great day. However, we did get rejected at this point right here, with some nasty sell volume coming in from this big red candle. But it is what it is. However, some good things to note on the day is we did trade in this trading range here from $30 and just about 21 cents all the way to a high of $31.51. So relatively small gap. Small-ish gap for the day that we were trading within. So that's great. The bottom of our trading range coincides with yesterday's top of the trading range. So seeing that we held that top today shows A, that we were very comfort at this level, and B, that we didn't want to leave this region. However, the biggest thing still remains, the volume. Today we traded at right around 45 million in volume, which was a decrease from yesterday and a pretty drastic increase from Friday's trading. But of course, we'll talk more about that when we zoom out to the 1 hour chart. But some things to note. As we were discussing in yesterday's video, we were talking about the reaccumulation schematic. What does this mean? Well, a reaccumulation is just a pause in the uptrend. What we got yesterday, where we had some very nice volume coming in, and then we start to consolidate, and this consolidation is more of a reaccumulation. As we can see with these big candles intraday, and of course, while we break into this new trading range. Now, jumping back to the chart, where I had us as of today was in the top portion of this resistance channel, which still makes sense. We are technically trading in the top end of our resistance channel. We didn't quite get the breakout. We did consolidate for a little bit and consolidated specifically towards the end of the day at the top end of our trading range from yesterday and Friday. So still totally fine. Now, what happens next according to this reaccumulation schematic? Well, after we do consolidate in this range, double bottom here, we should start to see that next leg up, breaking out, retesting, and then coming back up. As we described it yesterday, it would probably look something like we break out of this channel, we move up here into just about the mid-30s, anywhere from like $33, $34 to just about $35.50-ish. That would have been absolutely perfect. However, we didn't really get that today because of the volume, in my opinion. Now, intraday, look at this volume. We were extremely, extremely low. So I am a little bit cautiously bullish on tomorrow. Of course, I would love to see that reaccumulation play out per the chart. But the biggest thing is we need to see that volume come back into the picture. Now, let's jump to the 1 hour and really just go from there. So as per yesterday's video, we were talking about this inverse head and shoulders playing out. The first head coming from 12.1 to just about 12.6. The shoulder being that terminal shakeout period last Tuesday, just about a week, well, exactly a week ago on 12.14. And the last head coming in yesterday. Now, everything does look picture perfect to the T. However, there are some issues that I see on the 1 hour chart. First, the volume. We have been on this descending level of volume for just about the past couple of days, since 12/17, of course, Friday. Friday, we had beautiful price action. Yesterday was a little bit low, and today was a lot lower. So we do want to see this volume pick up. Now, I'm not saying that we 100% are coming back down, but if we don't get that volume increase, we absolutely are coming back down. Some levels that I'm personally watching is this trend line here. So right around the mid 20s, 29. So like 29.50 area, 29.30, somewhere in between there. If we do break that trend, I would say a quick retest of 28, low 28s to just about 27.50 area. And if we don't hold that, we're going to have to start charting from there. So I do believe if we did hit 27.50, that would be a nice little, I guess you could call it a mini spring level, launching us back into this trading range over here and starting our retest. However, that does not have to happen. If volume does pour in, we'll absolutely see that reaccumulation schematic play out and start making our ways into the mid-30s, as in tomorrow and Thursday. But of course, guys, we're going to take it day by day and go from there. A few additional things I did want to discuss with you folks is going to be the RSI. As you can see on the RSI, we are bouncing on this 70 range and haven't really broke above this, which of course, anything over 70, that is overbought. Below 30, that is oversold. So it makes sense that we are kind of hitting this, cupping down, hitting this, cupping down. And this pattern could play out over and over again until we see those massive candles come in. But like I always say, we'll take it day by day because the biggest thing, in my opinion, is seeing that volume increase. So just to review real quick before we move to the one-day chart, worst case scenario, we see absolute worst case scenario, we see a touch on the 27.50 area, between 27.50 and 28 and change, just about like 28.15. Second worst case scenario, not even a bad scenario really, would be a touch at 29.50 before we start moving higher. And best case scenario, this reaccumulation schematic plays out and we start making moves to the mid 30 range. So we'll see what happens tomorrow and we'll go from there. Now, last thing I did want to touch upon is the one-day chart. As you guys can see, we're actually going to take these drawings off here. We did almost, it's close enough, guys. We pretty much got rejected off of this 100-day moving average. Nope, sorry, correction. 200-day moving average. I was correct at first. So this rejection certainly isn't the greatest thing to see along the lines with descending volume. And as we could see on the 1 hour with RSI starting to point in the down direction. Now, we do have the MACD crossover that did come in yesterday. So that is a really good thing to keep in mind. So if we can see volume start to come in, we stay in the trend of moving higher along that trend line that we earlier talked about, things will look good tomorrow. But if volume doesn't pour in, then I do see some downside potential. And I think we'll easily be able to tell how that looks or how the day is going to look based on pre-market. Now, some interesting things to note as well. I do want to jump over to the S&P 500, but first, I'll just show you a quick look at today. So AMC, down in pre-market, push up, and then kind of trade down for the rest of the day. Now, if we jump over here to, give me 1 second, not swing plays, we're overall market. We're going to look at the S&P 500. What happened is we actually gapped up in the morning, traded down when AMC pushed, and the S&P 500 pretty much closed at the high of the day. So, jumping back to AMC, well, quite the opposite happened, where we gapped down in the morning, pushed up, and then traded down. So the reason I'm talking about this in the first place is more to show you that this negative beta is really starting to play out with AMC. So, this said, keep an eye on how futures open tomorrow. If we see red futures, well, I think we're going to have a decent day with AMC and vice versa. So that is definitely a decent sign to see, especially how the overall market has been performing lately. There's been a lot a lot of gaps that we've been seeing. And we'll even just jump over to the 1 hour real quick and show you guys what I'm talking about. I mean, look at this. This looks so freaking ugly. Jeez Louise. So, it looks like the SPY had a great day. I mean, who knows what really happens next on this. Biggest thing is, yeah, you kind of do have descending volume on the S&P 500. So, we'll see what happens there. But, nonetheless, that negative beta is really starting to play out. Anyways, guys, let's jump into the options flow for today and give you a quick look. Some relatively good things coming through. So what we saw in the morning today was the 12/18 expiration for $60 calls. I guess $60 calls were very attractive from a price perspective today. Excuse me. So that's why we saw a lot of activity. But let's just go through it. 104,000 premium, 103, 101, 100,000, 100,000, 141. So absolutely a lot of activity. And even up here, we have another 100 and another 100. So all of these relatively right around 100,000. And there was just about 8 of them. So let's say 800,000 in activity for the 12/18 expiration, all on that $60 strike. Now, I did put a tweet out about this today, and a lot of folks were a little confused on what this really means. So it doesn't mean that by 12/18, we're going to see $60. Absolutely not. Or that we'll start to see AMC move by 12/18. The reason why you have these longer expiration plays is because of time. Time is a very important aspect of how pricing metrics go into the options and the overall or underlying prices of them. So the closer you get towards the expiration, the more time decay that you'll have on your calls, thus decreasing the overall price of it. So typically, if you're a smart trader and if you're playing the options and derivative market often, you'll know that you're going to push out those expirations to give yourself plenty of time to still make money and not see that decay because of time. So what this means is we should absolutely see before 2/18/22 for these calls to be actually profitable, some moves towards that $60 range. Now, of course, typically you don't have to get to $60 to be profitable, but what you do need is price to start increasing. So that's exactly what that means. But looking into the options data for today, we'll go and break down today's levels. We can see it was mixed. Buying calls, we talked about those $60 calls for 2/18/2022, but a couple of puts were also bought. Nothing really to be wary of. Even we'll actually just break down the number of calls. Looking pretty damn good. I mean, calls are at 78% today, puts 22%. The volume still high 70 or mid 70s in the percentile range. Breaking it down by expiration, the 12/23, which of course is the end of this week, it's pretty even between the bulls and the bears here. But the biggest one comes in, or the next big one comes in on 1/21/22. Of course, that's been a very popular play for a lot of people. We talked about the 2/18s, and then the 3/18s are also another popular one. But breaking it down by strike, you can see the reason why we closed above 30 today was because the bulls were absolutely aiming for us to close there. The next activity range you can see, $35. So that would absolutely be our case for end of week this week. Closing at $35 would be 100% ideal. But as always, guys, we'll see what happens. So, guys, last thoughts before I let you go. Cautiously optimistic for tomorrow. Big thing is we got to bring the volume. If there's no volume, then yeah, we are going to see a little bit of downside back into the high 20s. But that's fine, guys. We'll get a last retest of support here, right at that $28 level, before we blast off. It'll add a little extra time, but it is what it is. All right, guys, that's all I have for today's video. Be sure to smash that like button, subscribe for more content. Peace out, and tune in for the next one.